It is now my pleasure to turn the Q&A session over to Tony Rosati, Vice President of Business Relations. Tony, the floor is yours.
Great. Thank you, Alicia, and thank you, everyone, for joining us today. I'll be moderating this call on behalf of Jason. In the room with me, I've got Edward from Nagel & Associates, I have Stuart from E2R, and I have Tracy from Ceridian. I'll wait for a few questions. There were a few that were actually presented during the webinar. There's a question here from Ray, and I guess I will point it towards Edward. It says, how prevalent is fraud? You guys are talking about large companies who employ certified payroll professionals to do their payroll.
Well, Ray, it's a great question. I think in some respects, the more qualified the payroll professional, the greater the ability that person has to carry out, more sophisticated fraud. In a large organization, one of the challenges that the company has is that they don't necessarily know who all of their employees are. It's unrealistic for an HR payroll department to necessarily know every single employee. And often organizations that are larger are decentralized. And so with a small organization, you've got an owner-manager who's involved in the day-to-day and has that ability to see if something on the payroll stands out. So I would say the short answer is, I think the more certified or qualified individual actually possibly even increases the risk of fraud.
Great. Thank you for that question, Ray. We also have another question that came through from Cecile. And again, I'll address this one to Edward as well. How does moving to a more paperless environment impact fraud and ghost employees? And I'll probably just kind of make a part B to that. When we talk about expenses, today a lot of organizations are moving more to a paperless environment where they're submitting it via email as opposed to the hard copies or original copies that were submitted in the past.
Cecile, that's another great question. Historically, one of the most common ways to investigate fictitious or ghost employees would be for someone who's different from the person who normally hands out the payroll stub to step in on a surprise basis and hand out those stubs. Today, that's not necessarily possible given we're moving towards a paperless environment. So organizations have to turn and implement alternative procedures and checks and balances, such as audits, periodic audits on a spot basis to ensure that all their employees on their payroll are legitimate, and otherwise ensure that there isn't fraud going on within the organization.
Great,
the second part of the question, to address the expense report side, there's a number of different websites out there and opportunities for people to create fictitious receipts. Ultimately, many organizations are turning to audit a larger period of time. So, for example, rather than just picking one expense report, they're picking 6 months, 9 months, or even a year of activity, cross-referencing those expenses back to the employee schedule, looking at specific dates on their calendar and determining, did that person actually go to a meeting that required them to take a $50 taxi ride? Cross-referencing, for example, to the P-card spending to ensure they're not double-dipping. So there's a number of different ways that, notwithstanding the fact that we're moving towards a paperless environment, that organizations can prevent fraud by implementing alternative procedures.
Great, thank you. There's a question that's come here for Stuart. I think you touched a bit about it in the webinar, but we understand that an employee's personal circumstance can often contribute or cause the employee to engage in fraud. Should we be inquiring into such personal circumstances?
And that's an excellent question. It is clearly a delicate balance. On the one hand, as an employer, certainly you don't want to be seen as inquiring into the details of somebody's personal life. Having said that, it's all people in the organization. And to the extent there are trusted relationships, one would hope that a conversation or conversations could ensue that are, let's call it, relatively fluid. When you ultimately ask somebody or engage in a conversation where that person provides you with some personal circumstances, they're volunteering that information to you. You're not, of course, as the employer, requiring that it be disclosed. But once you become aware of that information, now that needs to trigger a consideration as to whether this person might be a likely candidate to engage in some form of payroll fraud. And as we've discussed in the webinar, it is perhaps, or indeed it is regretful, that often it is a long service, senior, trusted employee that engages in this form of misconduct. So particularly because we have the history with that person and perhaps we recognize some anomalous behaviors, that will cause us then to engage in the conversation with the individual. Hopefully, during the course of those conversations, we will learn information that will cause us to perhaps identify this person as a potential risk, but hopefully long before this person engages in the perpetration of a fraud, we have referred them to an EAP program or to some program where they can secure some support, some assistance, and hopefully we never have to, as the employer, end up in a process where we're now uncovering what were concealed acts of fraud.
Thank you for that. There's a question here that had come through regarding use of manual punch cards, and it will go to Tracy here. What would be the best option for us to upgrade to something less risky?
Thanks, Tony. Leveraging an automated workforce management software will eliminate the manual process of inputting time card data. It'll reduce any of the occurrences where there's where you have buddy punching or different types of changes that need to go in that get missed on a regular basis. So it streamlines the process of the information going in with the audit and controls around it that identify where those changes are and where some of the inconsistencies are that you can have disciplinary action put around.
Great, thanks, Tracy. We also have a question coming in from Bindu. Her question is, what duties need to be segregated for payroll in a medium-sized organization? And Tracy, can you answer that one?
Absolutely. So when you're looking at the segregation of duties, it's really important to understand the different control points. So if it's information that's flowing in for employee changes, you're going to have one person that will actually put the changes in, and then segregating to the next level where somebody's authorizing what those changes are to move them through into the system. In organizations that have HR and payroll, you're going to have some of those segregation of duties. It's understanding where those control points need to start and where they need to stop, where you're not having one person take it from start to finish. Edward, I don't know if there's anything else that you wanted to add to that.
I think one of the most common segregation of duties is the setup of the employee versus the payment of that employee. And to the extent that you have enough employees to separate those two roles, that's key. And I think job rotation is another thing that organizations can put in place to ensure that the same person is not always involved in that role. And if there is something untoward going on, the person who's going to replace them is more likely to detect that type of activity.
Great, thank you. Great question here from Grant. How likely is it that my accountant would catch fraud when doing our year-end? Edward, can you answer that one?
That's a very good question, and we've seen over the last decade and a half a number of changes to auditors' obligations to consider fraud as part of the audit. Historically, auditors, if they discovered something, they have to perform procedures to confirm or dispel that that's not necessarily fraud. Today, as part of the new standards, auditors are actually obligated to look at the fraud risks within the organization and actually develop procedures to map against those risks. And at the end of the audit, they have to reconcile to ensure that all of those risks have been properly addressed through those procedures. So the short answer is, while they're obligated to consider fraud at risk, most auditors today are not necessarily trained in fraud, and neither are their juniors. And they're also looking at things from a materiality perspective. So if somebody's going to stay below the radar, which is what most fraudsters do, it becomes less likely that they're able to detect fraud.
Great. Just to even add on to that one, Anna has a question here on what are some of the more common red flags to look out for in payroll fraud?
That's a great question. Red flags, or we call them sort of indicators of fraud. There's a number of things that we should be looking for. For example, an invalid SIN number. And on the CRO website, if you want to validate a SIN number, there's actually an algorithm, which is 7 or 8 steps that you can use to test that a SIN number is actually valid. If you've got an employee where their gross pay and their net pay are the same, that's a problem. If you've got all your employees receiving raises in a particular quarter or period, and there's 1 or 2 employees that are not receiving a raise, there may be a legitimate reason for it from a performance perspective, but that may be something to look into. Also, if people are taking a disproportionate amount of vacation or overtime, any kind of sort of anomaly that fall outside of the norm, those are the types of things to look out for. But also looking beyond, and some of the things that we talked about in the webinar, things like behavior, changes in behavior, people who don't take vacation, people who are not willing to seek assistance from employees when they're overworked, people who have personal financial issues driven by perhaps an addiction. So it goes beyond the red flags within the payroll. You've got to also consider potentially the red flags in the individual's personal and professional life.
Great. Stuart, did you want to comment on that? Or?
Well, I mean, and exactly what we touched on earlier, and that's so true when we talk about red flags. Look, at the end of the day, we're talking about people that are driving these fraudulent acts. And people typically display some kind of behaviors that would cause you to at least be concerned. So where you have somebody that's engaging, as Edward described, as anomalous behaviors, or if somebody's all of a sudden taking vacations that's out of the ordinary, or working overtime, or the appearance of working overtime in more significant hours than previous, there's now got to be a reason to be paying greater attention. And if we're looking at their personal circumstances, if we've learned some information, as we discussed moments ago, that may lead us ultimately to in effect, the reason why this person is conducting himself or herself as they are, and then move to try to ensure we mitigate the risk.
Thank you. Another question for you, Stuart. What type of controls would someone put in place for their company, a large number of employees that are either on the road or in remote locations?
Yeah, and that's of course very prevalent and becoming more prevalent. And I'm sure Edward could comment on this as well. Technology, of course, we have to make sure we've harnessed technology properly because we're going to use it for remote work. But having said that, as we were talking about with expenses, etc., we've got to be careful that we have the programs and software, etc., in place that permits us to get verification of what's ongoing. So, yes, we want to promote remote work because that typically has a benefit to the organization, but by the same token, of course, there's a loss of control to some degree. So not only do we want to make sure the technology permits us to engage the checks and balances that we're looking for, but we want to make sure we're asking for reports on an ongoing basis that will perhaps give us a better insight into whether somebody may be engaging in fraud. So I guess the bottom line message is, although somebody may be working remotely, that doesn't necessarily mean we have to lose the level of control that we might think we do. We should engage in specific efforts to ensure we're getting ongoing information that we can track and monitor.
Great. We were talking a little bit about questions that were geared more towards in-house payroll and people that of our staff. There's a question here for someone who has a fully outsourced payroll, and the question is, how will I access and verify the data both for fraud prevention and general reporting purposes? Tracy, can you answer that one?
Absolutely. So again, it ties in a little bit of your segregation of duties. When you're outsourcing your payroll, you'll have an interaction with a client as well as those individuals that are process the payroll. There'll be best practices put in place where you have control points, understanding who's authorizing what payments that are coming across, but then also having regular checks that are sent back to the client for final sign-off. There's also the CBI reporting, which is business intelligence set or an analytics that allow you to sign in at any time, and you can pull up ad hoc or a standard custom report that you have. By that, you're able to see any of the details that are going on through the payroll at any given time. There's security and controls that are put in place around those. So for individuals within your organization that are looking for a specific department, they can extract information only specific to that. And then there's also the payroll auditing reports, which are the control reports that come out after every payroll that you'll be able to review and validate to the payments and to the changes that have gone through and been processed in that payroll.
Great. Thank you, Tracy. Scott has a question here. In uncovering minor frauds, let's say less than $10,000, what is the cost benefit of trying to pursue repayment? Edward?
Well, Scott, it's certainly a valid concern, and one of the first things that we do with our clients before we undertake an investigation is to look at the quantum of fraud involved or alleged fraud and potentially look at sources of recovery. If this is an individual that we know doesn't have any assets, they rent, they don't own, some vehicle or some other asset that's tangible that we can turn into recovery, then obviously we have to consider that as part of that exercise up front. But having said all of that, what's to say that the fraud is only $10,000? Most of the time we uncover something, a fraud or alleged fraud, and it looks like maybe there's a few $1,000s misappropriated, but then when we start to really dig, it actually becomes a much more significant issue. So I think it's not fair to necessarily rule out the possibility that what we find is everything, and there may be a more extensive fraud scheme underway beyond even the one area we have uncovered.
Great. Alan's got a question here. We touched a bit during the webinar. How do you mitigate situations where an employee and their supervisor collaborate to commit fraud? So as an example, you've got the foreman who submits the timesheet for their staff where everyone gets an extra half hour per day. So I'll start with Stuart, and I think that also touches on Edward's background as well. Stuart, do you want?
Yeah, thank you. That's Alan. That's an excellent question. Clearly, if we're looking at costing any particular job and don't know what exactly the nature of the industry is, but we're costing the job and there's now another half an hour for the entire crew. Well, presumably, if I'm looking at what I anticipated to be the estimated cost for the project, and I'm now getting another half an hour on everybody on the crew and their timesheets, I'm looking at going, all right, it's now exceeded perhaps what my projections were, cost projections were for the project. So I would hope that there would be an opportunity to ask the foreman directly, right, and those questions that relate to now a higher cost, because presumably the foreman has some awareness as to what the project costs are going to be. They are now appear to be exceeding those costs. The foreman presumably would have to justify that. So, and you ask somebody to justify their position, their costs, etc., not only do you interpret the factual content of the message, but you also interpret their body language, their mannerism, the way they communicate. And when somebody typically is trying to perpetrate some form of fraud, they likely are going to demonstrate some kind of body gesture, body language, communication slant that would suggest to you that something not exactly, as they say in the vernacular, kosher. The other aspect, quite frankly, and Edward's mentioned it before, is rotation of jobs. Right? If you had other foremen perhaps rotating into this kind of work, then that foreman is going to presumably and hopefully have a different perspective on the hours that are required to complete the project. So maybe we wouldn't detect it while the work is being conducted. But if similar work or perhaps the same work is being conducted with a different foreman subsequently, and that foreman, of course, doesn't require that additional half hour, well, a question inevitably arises from those facts and circumstances. So once again, we always have to have a heightened awareness, particularly where our intuition tells us, particularly where we have cost estimates, that we're exceeding those cost estimates.
Thank you, Edward. Do you want to?
Sure. Stuart, you raised a number of great points there, and to add to that, I think it's incumbent upon organizations to ensure that they hold, in this case, foremen or supervisors responsible for and accountable, quite frankly, for their staff and for their hours. And to the extent that there are hours that exceed either the budget or the expected costs, they need to be able to explain those and substantiate them. There needs to be proactive analytics of the hours done relative, say, to other groups or other projects. And again, holding that supervisor or department head accountable. The other thing is education, ensuring that all employees, supervisors, and all levels within the organization are educated on fraud awareness and understand that charging an extra hour for time that's not worked and is not permitted, and these are the implications. And then finally, giving or providing employees with an opportunity and a mechanism to report concerns, because there is going to be one employee amongst that group working for that foreman who's going to all of a sudden have a conscience and needs to be able to have a mechanism to report the fact that this is going on. And although they're the beneficiary, they no longer feel comfortable with it.
I'm going to jump in there as well. We've spoke a little bit about it too with workforce management. So having the ability to have the analytics and track through with a workforce management setup, you're able to see you're doing analytics based on the changes that are happening, the schedules that were originated for each of those employees, who's changed them and at what point they've changed them, and then the approval process around that. So if you're looking at incidents, you're able to track it, and then you're able to validate it back through and monitor it throughout to see if there is an ongoing issue and have disciplinary action after.
Thanks, Tracy. There's a question here in regards, and I think it ties nicely with the previous question. What is the importance of having a handbook or policy guideline, and how does it need to be reinforced and updated to ensure that all employees are aware of the business policies? Stuart?
Well, let me sort of go from the back end. If the matter were at dispute stage, so if we've, let's say, terminated somebody who perpetrated a fraud, and that employee is making an allegation or claiming in defense that I was confused, I didn't understand, I made a mistake. And that is a common defense, as it were, or let's call it a common position that a former employee will take in connection with an employer's termination for cause when an employee is engaged in misconduct. So policies, protocols that are set down in writing, firmly entrenched as part of the organizational infrastructure, become fundamentally important in order to respond to that allegation that, I was confused, I made a mistake, I misunderstood. When you demonstrate to the adjudicator, whoever that is, that here is our written infrastructure that sets out the appropriate protocols, the checks and balances, that adjudicator then looks to that former employee who's making that allegation and can evaluate whether there's a plausibility attached to that position. And certainly where the employee would have signed off on an annual basis to having reviewed employee handbooks and similar policies, that former employee will be very hard-pressed to take the position that I didn't understand, I was confused, it was a mistake. And certainly where that employee functions in a more senior, trusted capacity, the likelihood of that argument swaying or persuading an adjudicator becomes diminished in a very significant way.
It sounds like, Stuart, that's more common in larger businesses. You sign up for a policy and handbook. We've got a number of folks attending this webinar. I'm a small business. I'm under 20 employees. Do I need this handbook? Would it make sense for me to have some sort of policy or something in place as a small business owner?
And that's a very, very good question. And that's often a perspective the small business person takes. I'm too small. This is for the big folks out there. I shouldn't have to do this. Well, the reality is I can tell you, my last count, I got up to 101 reasons why an organization requires an employee handbook. We are just touching on just a few of those reasons here. Reasons being that where you set out what that infrastructure is and what those protocols are, and you train employees and bring it to their attention, the likelihood of them engaging in acts that contravene those policies is diminished significantly. So not only is it, I discussed moments ago, that it put you in a good position as an employer ultimately in the event of any dispute down the line, but when you set up HR infrastructure, you set yourself up for success. I don't care if you're 1 employee or 10,000 employees. The exact same principles apply, and this discussion today about mitigating the risk of payroll fraud, it applies once again whether you're 1 employee, as it were, all the way up to 10,000 employees. Those principles, those risk mitigators apply and ought to be implemented.
Thank you, Stuart. Another question geared around the small business space. Would it be better, Edward, for us, to go outside the business to try and find help to determine if fraud is happening, or would it be better to keep it in-house from a small business, let's say under 20 employees?
It's certainly a question that is addressed to me on a regular basis when clients approach and say, we've got the situation or potential situation, we don't know whether to do this in-house or not. I think there's two factors that come into play. Number one, what are the objectives of the organization? If you're looking to pursue civil or criminal litigation, if you're looking to pursue recovery, if you're looking to terminate, there may be the need to have an external person come in, do a formal investigation, produce a report that would be admissible in the context of court, whether it be criminal or civil, or attached to an insurance claim for purposes of fidelity insurance policy. The other factor is objectivity. How objective can an employee within the organization be with regards to one of their fellow employees? I mean, ultimately, we're all very shocked when we find out that one of our fellow employees has committed fraud. How objective are we going to be able to be in terms of that investigation? So we really need to consider what is our objective as an organization from this process. And number two is, how objective will the investigation be if conducted by an internal individual? And just to add to that, there are cases where internal audit commences the investigation and determines that they need to now go outside of the organization to conduct the formal investigation. And I've worked alongside with internal audit very effectively. With a small organization, that's not always the case because they don't have an internal audit function. So it really is a matter of the organization looking at its objectives and determining what it wants out of the investigation.
Thank you, and thank you, Hassan, for that question. I've got a question that's going to Stuart here. We hired a senior manager employee to carry out senior responsibilities, but overlaying auditing certain of senior management employees' duties and responsibilities, are we sending the wrong message?
That's a very good question. Look, if you've got a senior employee functioning in a position of trust, and particularly if that person has access to financial matters, let's call it, that individual should embrace the appropriate checks and balances within the organization. So where an individual is expressing concern and a feeling that, I'm not being sufficiently trusted within the organization, that somehow it diminishes my reputation because I'm subject to checks and balances as part of the overall corporate infrastructure, I've already got a concern about that individual. Because, once again, that individual should embrace the appropriate implementation of checks and balances. So I would actually, coming back to that expression we used before about red flags, where I have that senior employee who is, in essence, identifying a concern attached to being required to respond pursuant to the relevant or applicable checks and balances, to me, that flag is blowing red, and I think we may have an issue there with that individual.
Thank you. And this one's to Edward. Our payroll clerks review each other's work. Do you think it's sufficient check and balance to mitigate the risk of fraud?
I've seen this very commonly, particularly in the public sector, but also in the private. And I think while it is an enhanced level of control, and it's one additional check and balance, I don't believe it's an independent audit. I don't believe in any way that it can mitigate risk. For several reasons. Number one is if these two individuals are colluding and they're each committing fraud or working together, obviously this audit or this review is not going to identify anything. The second issue is that they may be so used to doing the work and looking at each other's work that they're not necessarily or trained to look for these red flags. That's why you really need to have somebody outside of the payroll who's familiar with payroll, both from a technical and financial point of view, to be able to look at it independently and look for anomalies. Because this is a person who's not involved in the day-to-day and therefore can see things that don't necessarily make sense.
Thank you. On behalf of our guests here, Stuart, Tracy, and Edward, thank you very much for your time.
Thank you to all of our participants for joining us today. We hope you found this webcast presentation informative. This will conclude our webcast. You may now disconnect. Have a good day.